Welcome back to Leaders Live. This is our second episode of 2020 at Microsoft's headquarters at the Entre networking event. Appreciate everyone coming here. This is nice.
Cool. Thank you, guys.
Great guest, Sim Blaustein. You're the partner of BDMI, investments in media and technology, software, a lot of cool stuff. Again, background while we're doing this, understand how you operate, take some tips from you. Hopefully we can collaborate with you and we all can work together as long as we know what you're doing and we can, understand and communicate together.
Sounds good.
All right, I'm pumped up. A little background before BDMI, right? You start off in the corporate world a little bit and then you got into venture, Gabriel and Ventures, right? And I think that's kind of like where your career started to take off. I mean, very smart guy, but let's kind of walk through, give some context of your background and where you're going.
Sure. Started off, I was an engineer undergrad here at Cooper Union in New York City, and thought I was going to become an engineer as my career path.
Top of your class.
As life would have it, I sat in an entrepreneurship class my sophomore year and just totally got interested in startups and was fortunate enough to get I was sent to a startup as an intern that summer and just had such an amazing time. Literally, my life just pivoted, 180 degrees. And I ended up going back full time, and that's what brought me out to California. Worked at two startups before joining Gabriel. First one was very successful. I had everything to do with it. 1999, 2000 boom had absolutely nothing to do with our success at all. I was very fortunate to join it at a lucky time, and then the second startup in 2002. I rode the dot-com boom up and then the dot-com boom down, which I'm sure some of you guys remember. And I wanted to kind of better understand and have more perspective, and so I joined Gabriel as an analyst, as an entry-level VC, and kind of ended up staying in and out of venture, doing a couple things in between, but was at Gabriel for about 3 years. Wanted to do my MBA, went to MIT.
Not bad school.
It was fun. It was fun. And worked at IAC for a couple of years after that, doing corporate strategy and M&A. Was fortunate enough to kind of come back to my hometown here in New York at the kind of what I felt like was the beginning of the startup kind of renaissance here. I know there was a lot of activity during the dot-com boom and Silicon Alley. For a long time, this, I think, for a lot of people felt like a really difficult place to build a startup company. And 2008, I came down here, joined IAC, and it was really felt like the beginning of a very exciting ecosystem. There would be an event like this twice a year with maybe half the number of people, and you'd have the entire startup ecosystem in it. Was doing a lot of different things around corporate strategy and partnerships, and had the opportunity to co-found Highline Venture Partners with Shanna Fisher, backed by IAC, and was sort of again, I don't know if it was luck or kismet or whatever, but doing seed investing, and did that for 2 years before leaving to join BDMI, where I am now for 8.
Yeah, and you were with all these companies, with a lot of investment firms. I mean, you have any mentors that stood out to you? Anyone that, you were around the best. You're investing in a lot of great companies. You're working with a lot of people who are investing in them as well. Any partners or anything like that stood out to you that you learned from and took with you today?
Oh, for sure, for sure. In some ways, this is going to be a cheesy answer. Some of the most influential mentors for me have been the entrepreneurs I've worked with, because especially when you're a young VC, you often have 10 or 15 or 20 years less experience than the people that you're investing in, and so I think it's important to kind of especially the early, first board meetings I would go to, you spend a lot of time listening, and you're like, oh, that's how a sales plan works, or that's how accounting gets done, or bills get paid, or companies get formed, just sort of basic business stuff that people just learn over 20 or 30 years as an operator, that when you're 3 years out of college and never really had a real job, you have no idea what you're doing, right? So a lot of the people that I learned from first and foremost were the founders that I kind of got to observe and work with in those firms. But at Gabriel, I worked a lot with Tim Chang and Naveen Chadha, who are both at Mayfield, and both amazing people. It's actually fun to see them get back together. They left at Gabriel at different times and then reformed like mini Avengers, and have done amazing things. Shanna's obviously been fantastic. I had a great mentor very early on in my career. Actually, the reason I went out to the startup world was the founder of that first startup company. He had been an alum and just kind of took an interest in me. taken a company public worth probably over $100 million. Humble kid from the Bronx that was just successful, and this guy literally president and founder of a public technology company, spending time with a 19-year-old kid, explaining how the telecom industry works. Right? It's like you can't I could never have expected having access to those kinds of people.
And who was that?
Howard Flagg.
What was his superpower that you think that made him successful, that you took a little bit of piece from?
Gosh, I wish I had learned more from him. He passed away, unfortunately, too young, but he was an incredible listener. So, going to, a lot of engineering and science-oriented schools growing up, you sort of meet a lot of, introverted, kind of nerdy people that have, trouble with social skills, as many people in the tech world are stereotyped to have. And he was just this great, high EQ person that, and I don't know if it was his nature or just a learned skill through his career, but he was just an incredible listener. He was incredibly curious. Again, it floored me that this person who had had so much success in life would have a conversation like this, and he'd be completely and utterly interested in learning something from you. And it was like, what am I going to teach this guy, right? But he just could connect with people in that way. It was amazing.
That's great. As you worked your way at BDMI, let's talk about when you jumped into the fund and how you started. But really, what the fund is right now. It's you have two funds, and give us a little bit of background.
Sure.
You're investing in the media companies, the tech world, everything that's going on.
Yeah, sure. And I'll give a little bit of context if it's helpful. So there's different kinds of venture capital funds out there. Most venture funds are, pure financial vehicles. They'll raise a pool of capital from limited partners. They'll form a partnership and they'll deploy capital as sort of investment companies on a standalone basis. Our fund is a little bit different. So we're a corporate venture fund. And so we're investing off the balance sheet of a global multinational company called Bertelsmann. They're very creative with names. So we're Bertelsmann Digital Media Investments. And we're actually one of 4 venture funds. We've got sister funds in India, China, and Brazil as well. And so, we actually operate much the same as any other VC fund, but what makes us different is access to the global platform of our parent company. And so our goal really isn't just leveraging the dollars that we're investing in, but also the network of people that we know through Bertelsmann, our access to different people in the industry. And for those who don't know, Bertelsmann is a German-based company, so a lot of folks in the US are not as familiar with it, but we own Penguin Random House, which is headquartered up Broadway here, and we work out of that building. We also are one of the largest TV broadcasters in Europe with RTL. We have BMG, formerly Bertelsmann Music Group. We have a big services company called Arvato. We have a big education division. We have a company called Gruner & Jahr, which is in the magazine space. Have I forgotten anything, Brendan? Look at my colleague over there.
You used to be partners with Sony too, right?
Yeah. So the old BMG was actually merged with Sony as a joint venture in the early 2000s, and then that business ultimately became part of Sony. What ended up happening was that there was sort of a stub of rights management businesses that BMG retained, and then we actually grew that back up it's a little bit different. We do have recorded music now, but most of BMG is actually managing the copyright portfolios of songwriters.
Right. So you're invested in over 400 companies across the globe.
Across all of the Bertelsmann investments.
Yeah, right. So let's talk about a little bit about the companies you're investing in, founders you're looking to invest in, and maybe some of the characteristics you see in a founder or somebody starting a company that you like to work with.
Yeah, sure. And sorry, you asked about the 2 funds, just to clarify.
Yeah.
So we're an early stage investor. Most of what we do is Series A, $1 to $5 million checks. After I joined in 2012, we wanted to create an earlier stage investment vehicle, which we call our seed fund, which is sort of $100,000 to $250,000 checks. And our approach with the 2 funds is somewhat different. In the former, where we're writing larger checks, we look to lead or co-lead. We'll spend a lot of time getting to know the team and diligencing the opportunity. And usually take a board seat or a board observer seat. At the seed stage, we're a little bit more passive, so we view it as an opportunity to build a relationship with the founder. But typically, those are led by another fund, like an institutional seed fund. To answer your other question about what we're looking for in founders, I'd say we're probably we're first taking kind of a market and sector lens. So our first filter is typically areas that we're excited about, places that we think we can add value. So obviously things that are closer and near and dear to media is one area. We're spending some time in fintech as well. We're looking at kind of the intersection of content and AI and synthetic media. Audio is a pretty exciting area. So generally speaking, and I think this is true for a lot of funds, while we try to take a relatively broad approach, there's always like 4 or 5 different sectors at any given time that we might be more interested in, and some things that we might be less interested in, depending on where we think there's opportunities.
Sure. And then you're evaluating these founders. You're
100%.
evaluating these decks or whatever it may be. But let's
Yeah.
talk about the founders themselves right now. I mean, we have a lot of great people in here too. But what are the characteristics that you see in a successful founder?
Yeah, it's a good question. I would say there's obviously a few common traits which probably are motherhood and apple pie. It's grit and determination and hard work and curiosity and the ability to hire great people and build a team. I do think though that for different kinds of companies in different stages, we're often looking for different things, right? So there's this sort of when I was coming out of business school, there were a lot of classmates of mine who were really excited to found companies. And as a VC now looking back, when you see a team founded by like 4 MBAs, where every single one of them is extremely good at like PowerPoint and Excel and knows how to like tell a great story, but maybe they're working in like the beauty industry or like in some logistics and supply chain space or like something where you actually might want to have someone from industry, right? Or if you're building a consumer product and you want someone who's really good at design. So like we do look for things, again, depending on the stage, where there's some level of complementarity. And some of the best, it's funny because there's obviously great individual founders, but a lot of times there's that great team where there's the sort of yin and yang. There's the person who's really good at storytelling. There's the person who's really good at product. There's someone who's out there recruiting and getting revenue, and there's someone who's making sure that the trains run on time internally. Mm-hmm. And that's like that. So it's almost like you could have 4 of the most amazing founders in the world, and if you put them together, it might actually be a bad idea because their skill sets are also similar, that they don't have a way to kind of like all contribute to the same thing.
Right. Of those characteristics, like of the founders, I mean, is there any specific founder that you think is the strongest that possibly leads that?
You're asking me to pick a favorite, Charles.
Yeah.
I can't do that.
All right, fair enough. How about if anyone's looking for funding?
Yeah.
What do you like to look at in a deck, and what do you like to see? A lot of people are kind of scared to send decks to VC funds and try to approach you. What's the right way?
Yeah.
What's the best way that you like?
So a lot of questions in there, and happy to answer them. I would say that the typical way to approach me is usually through some kind of warm introduction or referral, mm-hmm. And we see great deals from everyone from like our own colleagues at Bertelsmann. Many of our founders will send us folks that they know. And in general, I think that entrepreneurs themselves are probably the best source of referrals for other entrepreneurs. We see deal flow from other investors as well. And especially funds that invest alongside us or maybe invest a little bit earlier stage than us and send folks in, service providers, lawyers, IP folks, et cetera. But there's even, and I would say like even in the industry, as we think about, for example, we've gone pretty deep in the audio and podcasting space, and so now we start to see a lot of the same people in orbit, and a lot of the folks now kind of know each other and will refer people to us. The deck question is an interesting one because we're helping our founders raise the next round. It's one of the you're trying to optimize for something that you can send that will provide enough information to answer somebody's questions, mm-hmm. but can also kind of act as a as something you can talk to in person. I'd say the biggest, so it's a balance, right? I generally say it should be short enough that like if I'm on my phone, waiting, for Starbucks and I've got like 2 minutes or 3 minutes to flip through, like if I need to wait to slide 25 to figure out like what stage you're at and like how much revenue and what you're looking for and what you do, like it's probably not a great deck. Mm-hmm. So that's like, like stuff like that I think is important. I think that, one of the things we look for in most of our businesses, and going back to founder traits, is like, we do like to see very analytical people. So we like founders that kind of understand the key metrics in their business, whether it's financials or KPIs or, sales productivity. And so one of the things we're looking for is people that are really on top of those And obviously, if you don't know something, you don't know something. But sometimes you want to know that founder has a really strong handle on what makes the business tick.
Right. I mean, you were talking about possibly getting that deck originally, and entrepreneurs setting that up to other entrepreneurs, getting to you. I guess that kind of, we're jumping around, but leads to kind of like the networking aspect of what we're talking about here. We're in a networking group, pretty relevant. How do you network? How do you best network? What do you see that works? Obviously, people within your network, you just said that you already invested in. You look at those warm introductions as helpful, but
for sure,
what's the best way for you, and maybe a tip that you could give to everybody here?
Yeah, I mean, I definitely think, and I don't know how, I hear many VCs kind of give the same answer. Probably the warmest introduction you can get is from a fellow entrepreneur that I've already backed, right? So if it's somebody that we've invested in, and they say, hey, this is a really interesting company, I've gotten to know this founder. I know there's a lot of entrepreneur to entrepreneur networking groups and CEO groups and people from the same industry as I was talking about before. That's a great way to come in through an introduction because we've already backed that person, so them sort of acting as a vettor for us. We've given them money. We've kind of trusted them with their own business judgment, and so that's a great way to come in, especially if they're in a similar field where you're like, okay, this person really knows marketing software, and the fact that they're vouching for this company, this founder, is important. As in terms of advice, in terms of other networking events, I mean, I think that meeting other founders and kind of meeting folks who've already raised money is probably a good way to do that. For some industries, there are really good conferences and events where you're kind of there meeting customers or meeting potential hires or partners. And because we're kind of thematically focused, I will try to cover and be at those same events. So I always love I'll use the marketing technology example, but if I'm in a MarTech event and you're a MarTech company there, there's probably a reason we're both at the same event, right? Mm-hmm. And so I feel like the context is very helpful because then you've got the opportunity to meet in person. We're there to have meetings. We're there to do business. So that's always fun. I will say there's the most random. I have had the pick up at a coffee shop where I was having a conversation like this with another VC, and an entrepreneur who's sitting 2 seats over overheard that we were VCs
or stalking you.
And literally, I mean, this was at a coffee shop in Brooklyn. So he literally walked over with his business plan and kind of politely said hi and offered and I was I loved it. It was fun. We ended up taking a look at his business. We didn't get there. He actually now works at one of my portfolio companies, which is also kind of random. But I love that hustle, right? That's just kind of you have to put yourself out there.
Once you identify, someone you're putting your money into, you're backing, that's in your portfolio now, you are pretty good at business strategy, business growth. Talk about maybe business strategy, how to get to the next level, because there's different funds, different rounds, right? You got the seed level, you got the A level, whatever it may be, but the business strategy of it and the development, you're an expert in. So can you give some tips on that?
We try to, number one, we always co-invest with other VCs, typically other institutions. So just like we're looking for founders who are complementary, we're also looking for other investors who are complementary. It's something that's, I guess, a little bit different about BDMI. There are many funds, particularly larger West Coast funds that will like to do an entire round by themselves. And sometimes you'll see companies even at the Series B stage where they only have one investor because maybe they have a large fund and they're looking to build ownership. We're kind of the opposite approach, not that we're ownership agnostic, but we're often co-investing with other VCs that are bringing different skill sets. And so we like to tell people, I think we're okay at hey, here's how to think about marketing or PR. We're probably not the VCs that are going to help you hire your CTO or vet technology talent is just not our strong suit. The biggest area I tend to get involved with is in sort of business development, networking, particularly in our own kind of orbit. And so, after an investment, I might sit down and say, here are the things we can help plug you into. Here are the areas within Bertelsmann that we can be helpful with. Here are the other companies in the media and marketing space that we know and can be helpful with. Let's talk about, events you should cover, marketing strategy, holes in your organization, and obviously helping them think through a marketing hire or a BD hire or a sales hire.
Mm-hmm. I mean, well, the partnerships. Let's so partnerships, collaborations, right? I mean, this is more so you're partnering other founders or other portfolio companies. what do you look for? I mean, it's essentially a matching game, right? You're trying to find the opportunity to put two people together. But I mean, what has best worked for you?
Yeah. I mean, a lot of it is you try to open the door, help point them in the right direction, and then, it's generally up to the other people to figure out whether there's an opportunity to work together. One example, and this was fortunate enough to work relatively early on. One of the first investments I did at BDMI is Food 52, pretty early stage company. And one of the reasons we were really excited about the business was that across Bertelsmann, we're one of the largest food media companies. So Penguin Random House, I think, has about 50% of the cookbook market, and we have a lot of famous chefs and cookbook authors in our portfolio. We have a lot of food media brands in Europe, and so one of the first things I did with Amanda and Merrill when after invested was putting them together with a few of the people from those different areas, and they ended up really hitting it off with Penguin Random House. And so early on, I'd say within a year or so, they got a book deal and started a cookbook series called Genius Recipes. You guys should buy Genius Recipes cookbooks. Even though we sold our position in Food 52 as we exited last year, it still benefits Penguin Random House, so that's also good. But it was fun because it kind of brought a level of collaboration opportunity. They got a chance to work with more of my colleagues. I think it helped elevate their brand a bit as they were talking to potential customers, advertisers, and things like that. And one of the things that one of the fun things about being an investor in an early stage company is you can see a long arc, right? And a lot of times, you guys are coming out with your companies. Maybe some of you are early stage, and you just brought your product to market. And maybe I just invest in your company, and I put you in front of a half dozen decision makers who could be potential customers. 9 times out of 10, it's too early for them, right? That's just more often than not. But having planted that seed the first time, and then maybe there's an update, the second time you meet, or that person wasn't thinking that they needed a solution for podcast hosting because it wasn't on their radar screen. And then a year later, they have a massive audio initiative, and they're trying to figure out which technology companies to partner with in the podcasting space, right? So it's sometimes you're putting the right people together, but it's not necessarily the right time. And in that, it's really important to kind of have that persistence and make sure you're always checking back. And one of the nice things about us is that because we're having these conversations with many of these decision makers, oh, remember that podcast hosting company that we introduced you to 6 months ago? Oh yeah, what was the name of that? Oh, Art19. Oh yeah, we should totally call them back. Here's the guy's email, go talk to each other, right? And then the right time happens and a deal happens.
How do you keep track of all these contacts? I mean, I'm sure you're always trying to piece these together, right? And I think a lot of us are meeting a lot of good people here tonight, but how do you stay on top of everybody and making sure that, that's the guy, I gotta remember that guy, just like you said. I mean, you're a pretty well organized guy, pretty smart guy, but do you have any tips?
I wish I had a better system, to be honest. I mean, we
have an Excel document, possibly.
We have a big Google spreadsheet, and we try to maintain a long list of many of our kind of business development contacts, and we try to do a good job of categorizing them. It becomes stale really fast, right? After a couple of years, people's jobs change. So, frankly, there's no great system. The only answer I've found is that you kind of have a constant cycle and flow of people. Probably biased by who you actually want to spend time with because life's too short. But kind of at the end of the day, I'm sure there are people who are way more systematic and organized than I am at this, but I don't have a great system.
It's tough. Yeah, absolutely. We were talking about company culture before. It's sponsored by Hugo Team, which is searchable meeting notes with your favorite tools. The company culture that you try to instill within your portfolio companies. What is that? I mean, what is a good company culture? What are you seeing that's working?
Yeah, I mean, I don't want to take responsibility for instilling company culture by any means.
But you see a lot of good company culture.
Well, we see things that work, we see things that don't work, and obviously there's tons of examples out there of companies that sort of struggle as they kind of scale from what was it, the 2 pizza team? How many pizzas did we have back here? There's some math equation between number of startup employees and number of slices of pizza you have to feed. So I mean, I think that's a classic problem. Communication and transparency is probably one of the biggest ones. And I feel like it's always a balance, both upward and sort of downward communication, right? So it's sort of what's the frequency, what's the level of transparency, some of I think the best founders that I've worked with have like pretty well organized, speaking of good organization, emails. And they'll kind of send out emails with the stakeholders with like their senior team copied on it. And it'll be like, here's the wins, here's the fails, here's what we need help with. And it's like a really tough thing to kind of do regularly, but when you get into the habit of doing that on like, let's say one founder I know does it like weekly, which I'm shocked, but like monthly is probably pretty
Yeah, I was
pretty
going to ask about the
reasonable.
consistency of that. 'Cause
Yeah.
You have too many asks, it's not.
Well, I'm like, who has time to write the long email every
Sure.
year? But I don't. But I do think like that, like keeping everybody on the same page so that everyone has the same information at the same time is super important. But apparently, according to that Verge article about Away, don't use Slack, right? That was I think the takeaway there.
Well, we're at Microsoft. We use Microsoft Teams now.
Absolutely,
right?
absolutely.
Okay. Work efficiency, we were talking about that a little bit too. Everybody hates meetings. When you're in a meeting with your team right now, how do you make it the most efficient use of your time?
Sometimes I wish we were more efficient. I think, as sort of classic, make sure every meeting has a stated purpose and agenda. Make sure that you leave the meeting with action items and follow-up steps. I know folks that do the classic stand-up where nobody gets too comfortable. I guess we're lazy, so we all sit down. With most of my meetings are with founders, right? Either prospective investments or existing companies. And so if we're doing a good job, we're kind of stating the purpose of the meeting beforehand. So if you're coming in to present for the first time, I'm going to say, hey, come bring your deck. I'd love to meet you, love to walk through your business and better understand it. If you're coming for the second time, I might say, hey, I already know what you do. I really want to dig into your financials. Can you make sure that you have your Excel model? And if that Excel model was built by your CFO, like maybe she should come too, and like that way we have a chance to kind of interact and dig in. And at the end of the meeting, I try to say, look, hey, we're either excited and we want to kind of dig in, we need to think about it. This isn't a great fit and here's why, so that there's kind of a follow-up. I'm not 100% by any means on any of those. Sometimes you're kind of excited and then you kind of forget. Sometimes you're sort of still mulling things over at the end of the meeting and haven't figured out what the next step is.
Sure.
But I the best ones are definitely ones where it's we've got follow-up steps at the end.
Right, structured and follow-up steps.
Yeah.
I like that. We're going to take some Q&A in just a little bit, but one more question until we get to that is the future of digital media and everything that's going on. Where do you see this all going? We're at an exciting time right now, right? There's a lot going on, audio.
Exciting and scary, but
sure,
yeah.
Sure. So lay it out for us.
Yeah, sure. There's probably three or four mega trends that we're paying attention to. Obviously, the unbundling of television and sort of fragmentation of the video ecosystem is a huge one. And so, I personally feel like we're probably at sort of peak OTT in terms of the number of discrete offerings that people need to subscribe to. I don't think anybody wants to like subscribe to a single streaming service to watch one show and then have to remember which service it was on when they want to watch it. So I think we're going to start to see rebundling. But at the same time, there's never been a time where content creators have more access to data, right? So you used to have a bunch of TV executives sitting in a room, writer's room, producers, script, like people making decisions in a vacuum. And now you have this amazing access to audience data. What did people watch? Why did they watch it? How long did they watch it for? And I think that has repercussions up and down the sort of like value chain of content creation and distribution. As I mentioned before, we're spending a lot of time on audio as well. It's kind of one of the fewer spaces in digital media that isn't like controlled by platforms in the same way that digital and video advertising is. And so podcasting has been a small but very quickly growing space. We feel like there's a lot of exciting new players there. We're I'd say, thinking a lot about kind of how the future of content monetization will work. A lot of things have started to move away from advertising towards subscription. And so, at the same time, there's a lot of really interesting new digital services that are sort of content-like health and fitness and wellness that are quite interesting. But yeah, I could pontificate on the future of media for a long time.
You were talking about the data, right?
Yeah.
This is our 50th live show, which is pretty cool. It's our
Congratulations.
100th podcast, which is really cool. So check it out for sure. But The data is actually the hardest part. I mean, I don't know what to use or where to find. I mean, we get little numbers here and there from LinkedIn or Apple, iTunes. Is there some way we can find out the data in a better?
Yeah, I mean, it's tough because and I mean, thinking about a lot of creative industries, you have that stereotype that like people who are good at storytelling aren't necessarily good at numbers, right? And not that that's always true, but that's sort of the stereotype, left brains, right brains. And when we've looked at media businesses trying to become more data driven, generally the problem actually starts at the beginning. They just don't have like the metadata, right? Mm-hmm. So, imagine, and at scale, right, you've got television or movie production. We have a portfolio company called StoryFit that applies AI to scripts to basically make better data-driven decisions about creative. And one of the biggest challenges is just first that onboarding period of getting all of the different scripts in the same format. And then a lot of the magic that they do is actually normalizing it so that then they can figure out like how many characters they have, how long, and how many lines were in each piece of dialogue before applying like any of the AI, NLP magic or any of the analytics around like, what was the rating of the movie, how many viewers, or what did it pull into the box office and things like that.
Interesting. All right, that's a good answer. Anybody? We got questions from the crowd right now. We're going to open it up.
But only 3 to 4, you said, right?
It's up to you, and you get to choose. Sandy's got the mic, so she's going to pass the mic.
You mentioned, sorry. You mentioned, I guess, the sort of numerous online streaming services that are popping up, and it reminds me of what happened to the telephone companies, right? When there was a big separation of all the telephone companies, and then eventually rejoined. Do you see that happening with the online streaming services as well? And I guess when do you see that sort of like reformation happening?
I mean, we're definitely seeing consolidation in the space today. So a lot of that is just driven by the economic realities that you've got. A $20 billion a year media company, which frankly the size of Bertelsmann, used to be considered a behemoth in media, right? And you're competing with an Apple or Netflix that's 1 or 2 orders of magnitude larger. Right. So we're seeing that consolidation happen. I actually was thinking of it more from the consumer perspective, where I think more and more we're going to start to see bundles or new forms of like a cable bundle that will package those streams together so that you have an easier discovery experience, right? An easier consumption experience.
Yeah, I sort of see the same thing. I was just curious on your perspective with that. Thank you.
Cool.
So when somebody comes to you with a deck, how many people actually talk about that deck?
You mean how many people walk through the deck?
Like when you go through screening, does one person decide, oh, this is going to go to the next level of looking at it, it's good enough to have a second meeting, or does one person look, or 3 people sit together, or your whole advisory board?
Oh, that's a good question. I don't know how other funds do it. We're a small team, so 5 investment professionals. Brendan, my colleagues here as well. So like generally speaking, whoever kind of gets the deck first will take a first pass at it. Sometimes it's one of those things where you might not be sure and you might say, hey, I'd love a second opinion. That's probably the very small minority of the times. Usually if something's interesting enough and passes your first filter, one of us would take a first meeting and then kind of come to the team in our weekly meeting and say, hey, here's a company I met. I'm kind of excited, and kind of hear other people's opinions.
Quick question. You mentioned initial investment, $100,000 to $250,000.
For a seed company, yeah.
What do you expect as far as typically as a percentage that you want to get from the company?
Oh, I mean,
equity percentage.
Yeah, seed rounds these days are like $5 to $15 million pre-money valuations usually. So I don't know. Could Des do the math? It's usually about 1%. So maybe 0.75%, 1.5%, 2%.
And why does a company that size need $250,000?
Oh, we're investing as part of we're investing as part of a syndicate, right? So when we invest we always invest as part of a syndicate, but our seed program is typically a $1 to $250,000 check as part of like a $1 to $2 million seed round. So the company might be raising a couple million, and we'll be a relatively small part of that. Most of our capital gets deployed Series A, Series B, and we might be like half the round with $3 or $4 million check.
I actually have a slightly follow-up. I have a follow-up question on the slightly different angle. What do you expect to see as an outcome of the seed round? So is that a finished product?
Do you mean business milestones, or you mean from a funding perspective?
No, not from the funding perspective. From the funding perspective, I think you answered that question.
Yeah.
But I think from the business milestones, is this the finished product which is getting some traction, or is it just the product, or is it a product with I don't know, how many users, etc.?
Yeah, I mean, it's you're raising an interesting question, which is like when I started in seed investing, seed was like paper napkins, and you'd kind of build a product on that. And at this stage, frankly, like what used to be called seed, a lot of people call pre-seed, and what used to be called Series A is now called seed. And so most of the time when we're investing in a seed, and this depends on the industry, but we're usually investing in a company that already has a product in market, or is very close to bringing a product to market. And so, we're reverse engineering from the Series A, but they're going to have to be generating revenue and having customers, generally speaking, to raise an A. There's certainly social networking companies where it's all about user adoption. We don't do biotech, but I know there's a lot of biotech companies where it's all just about the process of the product discovery. For a lot of stuff we're investing in, to get to the Series A milestone, you might have to have $100,000 to $200,000 in monthly recurring software revenue to kind of raise a typical Series A. So, in the back corner.
Hi. So I've been podcasting since 2004, which is kind of crazy. I know it sounds crazy. And so right around 2006, I got sued by GoDaddy because we had about 5 million people live streaming and downloading the podcast. So now it's 2020, right? And people are still listening. And so I want to try to figure out how to bring it up to speed. But my challenge is I now have 10-year-olds listening. I have millennials, and I have 50 plus. So I want to kind of split it off into the 3 different services. You know what I mean? Like TikTok or, just content for them. Is that something that would be possible in an investment phase? And how would that even work? Because I have a lot of, I work a lot with celebrities. I cover sports and different stuff like that. So I have a lot of celebrity content, but I have other content of some of the people who passed away or just stuff you can never get again kind of thing.
Yeah, I mean, if you're asking, is it something we would look at as a potential investment?
Yes.
Yeah, sure, happy to.
There you go. Success there.
This side doesn't want to ask any questions. I had one question. All the question answers are over here. Are you allowed to ask a question? All right.
Jimmy's asking a question.
This is actually live from Grant Wiley, who's
hi,
actually
Grant.
watching. What are your thoughts on interactive video and pictures having an impact in advertising and being a solution for the lack of conversion currently experienced in streaming ads and pop-up ads in digital media?
It's actually it's a question we've actually thought about quite a bit. I've met a lot of companies. So the question was around creating interactive advertising experiences, and the word solution implies that there's a problem. I think that there is a problem for advertisers, which is that engagement with ads is low. I mean, I'm sure there's folks here in the marketing and advertising community. I don't think consumers have a problem with wanting to engage more with ads. I don't think they want to engage with ads except hitting the skip button most of the time. And look, as somebody who invests in advertising supported companies, marketing technology companies, I'd love to see a really cool ad format that's clickable and engageable and all that, or the next gen shopping business. But by and large, it's I haven't yet seen consumer behavior that dictates that this is a thing people want to do. It's I remember when there was the Punch the Monkey ad, which lasted for about 5 minutes on the internet, and then people got bored and they realized that when they click on ads, bad things happen, so they stopped doing it.
To add to that, Gary Vee though tried something at a sporting event with live interaction with Twitter, and it was a success, and people got stuck.
Well, I think if you make it interactive content, I mean, we're one of the Bertelsmann shows, America's Got Talent, American Idol, both produced by Fremantle, right? They're designed formats to be sort of interactive. But at the end of the day, it has to be kind of a fun thing. I guess the answer to the question from was it Grant, is that I don't know that there's a technology solution that will just make it work, right? Things have to be cool and interesting for users to want to do them.
Mm-hmm. Makes sense. We'll take one more.
One more.
So my question is, after you have invested, how does the engagement model varies after you have invested as a seed funding versus you invest as Series A or B?
That's a great question. We sort of, because we end up investing, I think we do probably anywhere between 10 and 15 new seed deals in a year. We can't devote as much time where we only own 0.5% to 1.5%, as we do if we're like leading a Series A and have a more significant stake. So for the latter, typically Series A or later, we're on the board or have a board observer position, which means that there's probably 4 to 5 or 6 board meetings a year. And then I try to meet or talk to each founder, at least once a month, maybe once every couple of weeks. Sometimes more frequency, like around an inflection point, a key hire, a fundraiser, or something like that. Or they'll come to me and say, hey, we really love your advice. We're trying to get into this new market, and I think you can be helpful. With our seed companies, we try to check in regularly, although it's more like, I'd say like 5 or 6 times a year. And that's why like the email updates are super helpful. And some of the best ones will actually have like a specific ask where they're like, hey, if you guys know people at X that you can introduce me to. And then of course, as companies are, we do kind of annual events with our portfolio, so we'll have kind of regular opportunities to get together with folks as well.
Okay. I have a question in extension to my first question.
All right. I like that.
You'll allow it?
I like that.
What are the
Is it okay
other
with you?
things apart from the money that you try to help these founders with?
Yeah, so I mean, there's obviously a lot of things that VCs do that's sort of table stakes, right? It's everything from like, trying to, be a coach and helping, mentor as they grow and scale their business. We will sometimes get kind of into the weeds on like their instrumentation and analytics. So like with a few of our companies that are subscription businesses, we'll help them think through like how we would look at and evaluate, their metrics, cohorts, retention, churn, LTV, CAC, that kind of stuff. As I said, we're kind of analytics and numbers driven, so we're always happy to spend time with Excel and founders. And then the other area, as I was talking about before, is really just helping with access to our Rolodex and networking within Bertelsmann, within the broader media ecosystem, and kind of helping cross-pollinate different people in our orbit.
Makes sense. As we wrap up, words to live by, personal mantra or ethos, something you could leave off with the community. I know, deep stuff here.
That's deep stuff. Words to live by. I mean, for me, it's the golden rule. You never know. You sort of never know when somebody that you meet is going to be helpful down the road. And like, as I was talking about earlier in my career, I was fortunate enough to have someone who had absolutely no reason to sort of look out for me and mentor me, devote an incredible amount of attention and time, and it changed my life. And it's one of these things where like, as I've progressed in my career, just taking extra time to put 2 people together, you find out later that they founded a company together, they got married together, one invested in the other. It's like, you never know what happens when, people help each other out. So I don't know. I guess I don't know if that's
pretty good.
A good catchphrase.
Like
I'll work on the catchphrase.
That's good. Let's use it. We're going to wrap it up, Nadal, and that's it. Everybody, thanks for coming.
Thank you, guys.
And show up to the next Entre event.
Cool. Thank you.
Very cool. Very cool.
I enjoyed this.
Thank you all for coming.